The best Forex indicators for serious traders. I know what you're looking for. The best Forex indicator that tells you when to buy and sell, so your trading account can spit out money like an ATM day after day. Unfortunately, the single best Forex trading strategy and indicator don't exist. If it does, won't we all be millionaires trading off a beach in Hawaii? Now, even though there is no such thing as a best Forex indicator, there are indicators that work in different market conditions. And if used correctly, it helps increase your winning rate and profit potential. So here's what you'll learn today. How to use moving average indicator and increase your winning rate. How to use stochastic and hunt low risk and high reward trading setups. How to use average true range and set a proper trading stop loss so you don't get stop hunted. How to use moving average convergence-divergence indicator and pinpoint market reversals and breakouts accurately, which is the best Forex session indicator for short-term traders. How to combine different Forex indicators and improve your trading results. Are you excited? Then let's begin. Part 1. The best Forex indicator. The magic of moving averages. The moving average is an indicator that smooths out past prices on your charts. It's easily one of the simplest and one of the best indicators for Forex. But don't waste your time deciding whether you should use a simple, exponential, weighted, or linear moving average, or whether you should use a short-term or long-term moving average. It doesn't matter, because there's no such thing as the best moving average. Instead, learn how moving average can fit your trading plan and help you make better trading decisions. And here are 2 things it can help you with. Number 1, how to use the moving average to trade with a trend. Number 2, how to use the moving average to ride massive trends. Let me explain. How to use moving average and increase your winning rate. I'm sure you've heard this a gazillion times. The trend is your friend. But the question is, how do you define the trend? Well, there are many ways to do it. But my personal approach is to use the moving average to define the long-term trend. Here's how to do it. If the price is above the 200 moving average, then look to go long. And if the price is below the 200 moving average, then look to short. Now you're probably wondering, is the 200 moving average the best? Here's the thing. There's no best moving average out there. I use the 200 moving average because it's a summary of what the price has done over the last 200 candles. But if you want to define a shorter or medium-term trend, then adjust the parameter accordingly. How to use the moving average to ride massive trends and improve your risk to reward. Here's the thing. If you want to ride big trends, you cannot have a profit target because it puts a limit on your profit potential. So, what should you do? You set a trailing stop loss. This means as the market moves in your favor, you adjust your stop loss in the direction of the trend. And one way to do this is to use the moving average indicator to set your trailing stop loss. For example, if you want to trail your stop loss using the 50 moving average, then you only exit your trade if the market closes beyond it. Here's what I mean. Now, if you want to ride a short-term trend, you can trail with a short-term moving average, like the 20 moving average, or if you want to ride a long-term trend, you can trail with the 200 moving average. Part 2. The best Forex indicator, the simplicity of stochastic. The stochastic is a momentum indicator created by George Lane. Here's what he said. Stochastics measures the momentum of price. If you visualize a rocket going up in the air, before it can turn down, it must slow down. Momentum always changes direction before price. In other words, the stochastic indicator tracks the momentum of price. It identifies when the price is gaining or losing momentum. But here's the thing. Most traders are using stochastic indicator the wrong way. They go long when the price is oversold and go short when the price is overbought. If you ask me, This is one of the fastest ways to lose your money. You're probably wondering, so how should I use the stochastic indicator? Well, here's my secret. How to use stochastic and find low-risk and high-reward trading setups. Trade in the direction of the long-term uptrend. Wait for the price to reach oversold levels on stochastic. Wait for an entry trigger to get long, and vice versa for a downtrend. The best Forex indicator. The awesomeness of the average true range. The average true range is an indicator that measures the volatility of the market. When the average true range has a low value, it means the market has low volatility and vice versa. So the question is, how do you use the average true range indicator in your trading? Well, here are two techniques you can consider. Number one, how to use the average true range indicator to set a proper stop loss. You don't get stopped out unnecessarily. Number two, how to use the average true range indicator to find high probability breakout trades. Let me explain. How to use the average true range indicator to set a proper stop loss. You don't get stopped out unnecessarily. In my opinion, one of the worst ways to place your stop loss is just below the lows of support or above the highs of resistance. Why? It gets stop hunted easily because the market tends to trade beyond these levels by a few pips before reversing its direction. An example. So, a solution is to use the average true range indicator and give you stop loss a buffer away from support or resistance. Here's how to do it if you have a short setup. Determine the average true range value and add the average true range above the highs of resistance. Here's an example. Now, if you want to give your trade more room to breathe, you can multiply the average true range value by 2, 3, or 4. How to use the average true range indicator to find high probability breakout trades. Here's a fact. The market moves from low volatility to high volatility and back to low volatility. Here's what I mean. So, if you want to find high probability breakout trades, be alert when the market is in low volatility period. There's a good chance it'll break out. Here's how to do it. Wait for the average true range value to approach the lows. Check if the market is in a range. If the price breaks out of the range, you can expect momentum to continue. An example. And if you want to trade the breakout, you can enter your trade when the price closes beyond the range. You can start to see why this is one of the best indicators for Forex, right? Moving average convergence-divergence indicator secrets. The MACD indicator is a momentum and trend following indicator. It has 3 parts to it: MACD line, signal line, and MACD histogram. For this lesson, we'll focus on the MACD histogram, and here are 2 powerful techniques you can use. Number 1, how to use MACD histogram and identify momentum reversal. Here's how it works. Wait for the price to come into market structure, like support or resistance, trend line, etc. MACD histogram shows a strong momentum. You want to see a high peak or trough. Wait for price rejection before trading in the opposite direction. Here's an example. Number 2, MACD histogram squeeze. How to identify explosive breakouts about to occur. Here's a fact. Explosive breakouts usually occur when there's low volatility in the market. You'll notice the range of the candles gets small and tight. But if you're a new trader, this might not be easy to spot. So, that's when the MACD histogram can help you. Here's how. The price comes into key market structure, like support or resistance, trendline, etc. The MACD histogram looks almost flat without any visible peak or trough. Enter the breakout when the price breaks the market structure. Here are a few examples. Part 3. The best Forex session indicator. If you trade Forex, then you know there are three main sessions to it: Asian, European, and New York. To make things worse, you have daylight savings, which shift back the European and New York session by an hour during a certain period of the year. And if you're a short-term trader, you don't want to miss the period when the European and New York sessions overlap one another, as the market tends to be the most volatile. Now you're probably wondering, how do I keep track of the different time zones and trading sessions? Well, I've got good news for you, because there's an indicator called Forex Sessions by Chris Moody, available for free on TradingView. Here's how to add the indicator to your charts. Select the indicator to your charts. Select the indicator called Forex Session by Chris Moody. Add the indicator to your charts. Here are the settings I used. Then you should see something like this. Here's what it means. Beige background is the Asian session. Blue background is the European session. White background is the New York session. Beige solid line is the opening hour of the Asian session. Blue solid line is the opening hour of the European session. Dark blue solid line is the opening hour of New York session. Now you're probably wondering, what use is the Forex Session indicator? That's a good question. And here are two ways it can help your trading. You understand your currency pair intimately and can identify hidden opportunities. You can backtest intraday trading strategies with ease. Let me explain. You understand your currency pair intimately and can identify hidden opportunities. Here's a fact. If you spend a lot of time watching a market, you'll start understanding the intricacies of it. For example, how it reacts before a news release, how it reacts after a news release, how it behaves during the Asian session, how it behaves during the European session, how it behaves during the New York session, what is the average daily range, and etc. This is a goldmine because you can identify hidden opportunities that aren't privy to other traders. And with the Forex Session indicator, it makes things easier for you because it highlights the respective trading session on the charts. As you can see, over the last 5 trading sessions, USTAD is the most volatile during the European session. So if you're a day trader, then you want to find trading opportunities near the start of European session to take advantage of the big move. Also, you'll realize that different markets behave differently, and it's your job to know your markets intimately. You can backtest discretionary intraday trading strategies with ease. The Forex Session indicator makes it easy for traders to manually backtest intraday trading strategies. Here's what I mean. Previously, if you want to backtest a London breakout strategy, you must scroll your charts to the London Open and manually record your results. If you've done it before, you know it's time-consuming to find the exact location on the chart where London opens. You've got to manually move your mouse to each candle and check if you've got the correct candle for London Open. Sucks, right? But the good news is, you can just switch on the Forex Session indicator and find the blue vertical line on your chart, because that's the candle of London Open. Imagine how much time you'll save without ever hunting for the London Open candle ever again. Now, let's move on. How to combine different Forex indicators the correct way. The purpose of trading indicators is to summarize the historical chart data so you can better interpret the behavior of the markets. And if you want to take things a step further, you can combine different Forex indicators and get better trading results. But if your charts look like this, you're obviously doing it wrong. So here are 2 rules to follow when combining different Forex indicators. Rule number 1, every trading indicator on your charts must have a purpose. Rule number 2, you only need one indicator for each purpose. Let me explain. Rule number 1, every trading indicator on your charts must have a purpose. You're probably wondering, what do you mean by purpose? Well, it means what the trading indicator is used for. For example, is it used to define a trend, or identify the market's volatility, or define an area of value, or act as an entry trigger, or set a stop loss? Rule number 2, You only need one indicator for each purpose. Let's say you want to define the trend using a moving average indicator, that's fine. But you shouldn't throw in the average directional index, Bollinger Bands, channels, and etc. to define the trend. Because you've got your moving average and that's all you need, period. So remove all the unnecessary indicators on your chart and leave those that serve a purpose. Does it make sense? Great. Frequently asked questions. First question, is the 200 moving average less important when focusing on shorter-term trends? The 200 moving average is useful to understand the longer-term trend. So if you're only focusing on the shorter-term trends, then the 200 moving average would be less important. Second question 2. I was trading the 5-minute, 15-minute, and 1-hour time frames, but my stops were hitting frequently at 1 average true range before moving in my favor. Does price action work on lower time frames too? Or should I only trade in higher time frames like 4-hour or the daily? If your stops keep getting hit often, then you might consider widening your stops with 2 average true range or 3 average true range. Price action can work on the lower time frame if there's sufficient liquidity in the markets. But I can't really say if you should or shouldn't trade the 4-hour and the daily time frames, because it depends on your goals from trading, whether you want to be a day trader or position trader, etc. Conclusion. Here's the deal. There is no such thing as the best Forex trading strategy and indicator. It's a fantasy. However, certain indicators work best in different market conditions. For example, you've learned how to use the moving average indicator to improve your winning rate, how to use the stochastic indicator to find high probability trading setups, how to use the average true range indicator to set a proper stop so you don't get stopped out unnecessarily, which is the best Forex session indicator for short-term traders, how to combine different Forex trading indicators and improve your trading results. Now I'm curious. Which is the best Forex indicator that helps your trading? Leave a comment below and let me know your thoughts. Thank you for watching.